Welcome, everybody. October 28th, the market update desk with Scott Riley, NMLS 157524. Well, we're at a new week, but we are still having the same issue with the 10-year bond. We saw the 10-year spike in mid-afternoon trading today at about 11 o'clock, and we're now up over about 4.27. This is continuing to put pressure on mortgage rates upwardly. In fact, we saw them rise also again in the afternoon. What's causing this is the traders and the market's belief that neither party is going to address the deficit, the spending, the uncontrolled spending, and try to create a pathway forward to getting spending to GDP or deficit to GDP down. There's just neither are showing a path that they want to do that or are willing to do that. And the market is saying this is unsustainable and it needs to be addressed. So obviously with the election, we'll have to see what happens. There's a lot of anxiety on both sides, very vocal, as we all see with the advertisements on both sides. And that's not helping the market trying to settle and rebalance itself. This is a very big week that we're rolling into now. Tomorrow we get Case-Shiller home appreciation, FHFA home appreciation, and the beginning of jobs data again, starting with the JOLTS report, job opening and labor turnover survey. Wednesday we get ADP report, GDP, first reading for Q3, and pending home sales. Thursday, PCE and initial jobless claims. Wraps up the week with Friday being the BLS jobs report. Now, with PCE, which is both that and the BLS is going to be just a huge dictator of where we go. Honestly, probably for the rest of the year. The month over month estimates for headline is to decline from 0.2% to 0.17. We're getting rid of last year's 0.35 reading. So that's great. We're going to come in with a lower reading. So we're going to drop off a higher one. And year over year estimates to come in at 2.1%. Then we're going to have core PCE estimate. We're 0.2 to 0.26. And the replacement is 0.32. So we do have good potential numbers for inflation data. JOLTS report, market's thinking about 7.99 million. ADP payroll about 115,000. Last month was 143. BLS estimate, take that for what it's worth. No one knows where that number is going to be. In fact, I don't think BLS really knows where it's going to be. The estimate's about 123,000. Last month's was 254. And for the unemployment rate to stay the same at 4.31. I'm sorry, at 4.1%. So it's going to be a really volatile week. And, for buyers, please don't fall into the trap of saying, I'm going to wait till spring, summer because rates are just too high. Yes, they're elevated from where they were 5 weeks ago. We told everybody 5-6 weeks ago to take advantage of the rates right then. They're up over a full percent since then. But if you don't take advantage of the market where we are right now with fewer home buyers out there, less competition, you are going to pay more in the spring, come probably late February, early March, all the way through the tail end of summer, because you're going to see a stampede of buyers come back in the market. And that's going to cost you significantly more than any interest rate difference between now and then. So don't leave money on the table. Take advantage of the market where it is right now for buyers. If you have the ability to buy, give us a call. We'll run numbers for you. We'll let you know what you qualify for, let you know what the cost is, what the payment would be, and what you could put together. So we're always working. Give us a call, 616-293-2189. Keep checking in here. It's going to be a busy week like we talked about. Senior analyst Mr. Gibson is hanging out in back of me on the deck, and he's resting up to get all those numbers ready for you. So we hope you find this helpful. We are back on a daily broadcast. It looks like I had first outpatient PT today. It kind of kicked my butt, but I am getting back energy and getting back on top of things. We appreciate you following us. The Market Update Desk is your singular original news source for the market for West Michigan. Give us a call, 616-293-2189.